Hello everyone, welcome to Trust Wales. In this video, we are going to dive into one of the most significant events in the crypto space, Bitcoin halving. Whether you are a seasoned trader or just getting into crypto, understanding how halving impacts Bitcoin and the broader market is crucial for navigating the waves and making smart decisions. First, let's talk about how Bitcoin's halving affects the entire crypto ecosystem. As most of you know, altcoins and even lower tier shitcoins often follow Bitcoin's lead. When BTC makes a significant move, whether it's up or down, the rest of the market tends to follow suit. This is because Bitcoin holds a dominant market share, and its movements often set the tone for overall sentiment. So, during a halving event, expect increased volatility, not just in Bitcoin, but across altcoins as well. Understanding this correlation is key to making informed decisions during these crucial periods. However, there are some exceptions, which means some of the currencies won't follow Bitcoin exactly, and most of them are those that have been listed recently or are less than months old. Moving on to some technical concepts that will help you navigate the price action. In this period, as you all know, trend lines and even breakouts are not as reliable as they used to be. Now, when can we trust them? At least there should be one way to help us predict BTC movement, which is in depth of the market and very important for both spot and futures positions. Let's discuss FVG or fair value gap. These are areas on the chart where price has moved quickly, creating a gap. These gaps often represent imbalances in the market, and they tend to get filled over time. During the Bitcoin halving cycle, we often see these FVGs playing a significant role as the market reacts to the reduced supply and increased demand. In this part of the video, I'll show you a picture of a fair value gap. The FVG starts at the closing price of the previous candle and ends at the opening of the next candle. The gap or space between these 2 points is what we call the FVG. Next, let's talk about the EMA 200, one of the most important indicators when analyzing long-term trends. The EMA 200 acts as a dynamic support or resistance level, and many traders use it to gauge the overall direction of the market. During Bitcoin's halving, the EMA 200 becomes even more crucial as it can signal potential shifts in the market sentiment. Pay close attention to how the price interacts with this level because it can give you an early warning sign of major trends reversals. Divergences, supply zones, and demand zones can be clearer by focusing on EMA 200. In another aspect, EMA 200 tells us if we can trust trend lines or breakouts to avoid losing, especially in future positions, according to Bitcoin ignoring all price action elements. Now, let's touch on trend lines. These are some of the simplest yet most effective tools in technical analysis. After discovering true FVG and EMA 200 on the chart, now we can trust trend lines. During the halving, Bitcoin tends to either respect or break through key trend lines, which can indicate a continuation or reversal of the trend. Drawing proper trend lines can help you identify potential breakout points and manage your trades more effectively. Make sure you do not indulge in drawing lines and make your chart colorful. Also, analyze the chart in all time frames step by step to have a better overview of the chart and upcoming channels. We will discuss more about it later. So, to recap, understanding the relationship between Bitcoin and altcoins, identifying FVGs using the EMA 200, and drawing accurate trend lines are all vital tools for navigating the market. These strategies can help you avoid the traps that many traders fall into and position yourself for profit as the market reacts to the halving. When discussing the relationship between Bitcoin, altcoins, and shitcoins, it's important to highlight the varying degrees of volatility across these categories. Although altcoins and shitcoins do tend to follow Bitcoin's general trend, their price movements are usually amplified compared to Bitcoin. For example, when Bitcoin experiences a 2% price movement, it might trigger a more significant reaction in altcoins, which could move by 5%, and even more so in shitcoins, which might see a 10% fluctuation. This is due to several factors: market capitalization, liquidity, and market sentiment. Firstly, Bitcoin has the largest market capitalization and liquidity in the crypto market, which makes its price movements relatively more stable. Altcoins with smaller market caps and liquidity experience more pronounced volatility because even a small influx of capital can result in more significant price swings. Shitcoins, which often have even lower market caps and liquidity, are the most susceptible to extreme price changes. Their prices can be easily manipulated by market participants, leading to sharp increases or decreases. Now, let's talk about some altcoins with strong potential, particularly in the spot trading market. The first ones I want to highlight are AR and FXS. These coins are closely tied to the artificial intelligence sector, which is rapidly gaining momentum. As AI continues to grow in importance and influence across various industries, the altcoins linked to this technology, like AR and FXS, could offer significant opportunities. In addition to AI-related altcoins, several other coins are showing strong potential for spot trading. TIA, Pixel, DYDX, WLD, Filecoin, IMX, and WON are all worth keeping an eye on. Each of these coins has its own unique factors driving their market activity. For instance, Filecoin is involved in decentralized data storage, which is another area with strong long-term prospects. These altcoins are great candidates for spot trading, offering both volatility and potential upside if timed correctly. Now let's shift to some live chart analysis. We'll start by analyzing Bitcoin's current movement in the context of what we have just discussed. As you can see, BTC has been representing bullish momentum. We've got key support levels at 73,000 according to fair value gap, and another one between 78 and 82 according to avoidance during spikes and block orders. Also, we have a resistance level at 108. The interaction between these levels could be crucial in the days leading up to and following the halving. Never miss liquidity zones and fair value gaps because we are seeing multiple spikes and strong candles in the recent movements, which means correction will soon happen. For post-halving, now is where patience pays off. Keep an eye on the key levels we've discussed, and remember to use FVG, EMA 200 and trend lines to guide your decisions. Setting tight stop losses and being flexible with your strategy will help you navigate this period successfully. Most important feature is BTC dominance and Ethereum BTC value, which now is showing us that these pumps for BTC won't last long and alt season is so close. That wraps up our deep dive into Bitcoin halving and how you can react to it effectively. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss any future content. Let me know in the comments which altcoins you are keeping an eye on during this halving cycle, and stay tuned for more deep dives into the crypto markets. See you in the next video.